Alrighty, good morning, everyone. Thank you for joining us. We're going to give everybody just a couple minutes to join, and then we will get started. Alrighty. Thank you all again for joining us today. As always, if you have any questions for the panelists, please go ahead and put those in the Q&A, and any technical assistance questions for me, please put those in the chat. And with that, I will go ahead and hand it over to Sunita.
Thank you so much, Bree. Good morning, everyone. Thank you so much for joining us today for disaster relief updates, this 80th session. So thank you for joining us. If you haven't been with us before, welcome. And if you have, thanks for joining us again today. We're going to go over some housekeeping and disclaimers a little bit later, but I'm going to do some introductions now. Today, this webinar is brought to you by the Northern California SBDC Finance Center. We are supported by the SBA and the state of California for free small business advising. The Finance Center consists of 20 plus lending specialists and advisors, myself, Sunita Maharaj, the director. We also have Steve Roth here, who is a lending specialist with us. His email is here. He's provided it for you. He will be answering a lot of the questions within the Q&A, and so will I, and Joan will also towards the end, or maybe during the middle. Joan Yamaguchi is here as well. She's another Finance Center advisor. She specializes in the ERC, so she's going to go over that as well. And then we have Carrie Ellenwood with the SBA here today. So thank you so much for joining us. Next, please. Northern California SBDC, if you would like to join us, the Finance Center, you can apply here at financingsimplified.com and get free services. You can also find your local center at www.norcalsbdc.org. Next, please. So housekeeping and disclaimer. The slide deck will be shared during this webinar in the chat. The webinar is also being recorded and will be available at ASKSBDC.com within the next day. If you have any questions, please place them in the Q&A and not in the chat, please. And then please wait until we get through the different sections, because we possibly will answer your questions during the presentation. And if you have a question in regards to PPP, EIDL, or other things, can you please just put within the question which program you're asking about, so that way we can answer your questions correctly. And again, if you have any technical, if you need any technical assistance, please place that in the chat. Things are changing all the time. This is our disclaimer. This will be here until forever, I believe. Things are changing all the time. We catch things that changed last week that we, are catching up with. So this information is as current as it can be as of the 23rd. There might be some additional information that's coming out. With the laws changing, there's a lot going on with the state. There's a lot going on with federal. There's a lot going on with SBA, catching up with all the legislation that came into play actually this weekend as well. So there's lots of catching up that we're all trying to do, and we're going to answer your questions as best as we can with the information we have as of now. Unless it is written, we usually don't talk about it. If you heard it in the news, we haven't gotten that verified yet. So we'll try and talk about as many things as we can that we know is current as of right now. So our agenda today, we are going to go over briefly the California Relief Grant, what's going on with that, the Paycheck Protection Program, targeted EIDL advance, the EIDL and the targeted EIDL advance, the SBA debt relief, Shuttered Venue Operators Grant, the SVO, it is not open yet. So I do want to let you know that it is not currently open yet as of today. And also the ERC, sorry, I forgot to update that, but it is the Employee Retention Tax Credit or the Employee Retention Credit. SBA team is also going to give us some updates, and they'll give us updates throughout this too, upcoming webinars and our Q&A. We do not have Case Force this week, but our next go around we will. So I am going to head this over to Steve Roth, and he's going to continue, and then I will pick it up again a little bit later on in the program. So thank you so much for joining us.
Very good. Thank you, Cynthia. So a couple of exciting new things that happened this past week. The first is that California has allocated a significant amount of money so that California will match federal guidelines for PPP tax treatment, which means PPP will effectively be tax-free up to $150,000, both federal and state. California has a $150,000 cap on the Ppp2 loan, and it'll be part of your calendar year 2020 taxes. But it's good news. This has been an open item for some time, and people have asked about it. So California cleared it up. The California Relief Grant, also part of the same bill put forth by the governor, will be expanded, or it's proposed to be expanded, from $500 million in the first round to $2 billion. The how and the when have not yet been determined. So as the state puts out its new rules and regulations, we'll certainly let you know. Next one. And then really the big changes on the federal level have been the Biden administration changing the Ppp2 draw so that starting today, for 14 days, that's through March the 9th, there'll be an exclusivity period for businesses with 20 employees or fewer. So for the next Ppp2, if your business has 20 or fewer employees, after March the 9th, so from March the 10th through to the end of the application period, which is March the 31st, all businesses can reapply again. But for the next 14 days, the focus is going to be on getting Ppp2 loans to small companies, which is, I think, good news all around. Next slide. A couple of other changes is, and we'll talk about this in more detail in a bit, there's increased financial aid to sole proprietors, contractors, and self-employed people, because there's a change in the PPP funding formula. And we'll talk about that as we talk about PPP for sole proprietors. If you had been denied a PPP loan because you had a non-fraud felony conviction, then that exclusion has been lifted. So if you have a felony conviction for a financial fraud, it isn't. But if you were involved in a, something else which caused you to be out of the program, you can now be in the program. The same is true for student debt delinquencies. The elimination restriction for student debt delinquencies has also been lifted. And if you're a non-US citizen, you were not included in the program before, you can now be included in the program, and you use what's called your ITIN, your individual taxpayer identification number, which is like your social security number if you're a resident. So the program has been open to residents as opposed to just citizens. A couple of eliminations have been lifted, which is all to the good. And then there'll be more funding available for sole proprietors, contractors, and self-employed people. Next one, Bree. Great. So for the first phase, I just changed it to phase one of the California relief program, since more money will be allocated. But phase one is closed, and all selection notifications have been sent out as of today. So non-selection and waitlist notices will go out from today through the end of the month, which is not the 31st, but the 28th. And And all communications are really through Lendistry. Lendistry is the agency that has been running the program for the state of California. We've included Lendistry's toll-free phone number as well as their sort of question email address. So if you do have any questions about where you stand in the California relief grant process, you should either call or email Lendistry directly, as they're the only ones who know exactly where you are. But by yesterday, you should have, everyone who was going to get a grant should have been informed of the grant that they were going to get. So that program is over, and we'll see what happens with the next round of funding, whether they're going to have people reapply or use existing applications or change the criteria. There's no way to tell at this point in time. Next one. Thanks. So for the Payroll Protection Program second draw, also called PPP2, the program is now underway. Next one. Next slide. There we go. So the program is open until March 31st. For the next 2 weeks, you can only apply if you have fewer than 20 employees in the company. And then after March the 10th, starting on March the 10th, everyone can reapply through the end of March. There's a $2 million maximum loan amount, 300 or fewer employees in total. And the key gating factor to being in the second draw is whether or not there was a 25% reduction in gross receipts between comparable calendar quarters of 2020 versus 2019. So that would be January, February, March, quarter one, April, May, June, quarter two, July, August, September, the third quarter, October, November, December, the fourth quarter. If any one quarter was down by 25% or more, you're eligible to apply for the second round of PPP2. And the program has been open since January the 11th and working well. I probably have 24 clients who've already been funded, and it's gone fairly well. Next one. Next slide. There we go. So the other eligibility issues, when you do the application, you'll be asked whether you've completely used or will use the full amount of your first PPP loan. Obviously, you know, the goal of the program is to get the money to people who need it. If you haven't used or you won't use your first PPP draw, then even if your revenues declined, you really shouldn't use the funds. And it's only for authorized uses of funds, you know, payroll, rent, interest on debt before business debt before a certain date, utilities, payroll overhead costs, the same ones that were in the first round of payroll protection. All lenders are basically open for applications. That's pretty much everyone in the Bay Area. And a broader assortment of nonprofits can apply. So if you're a charitable trust, a 501c3, you can apply. 501c19s, veterans organizations, most associations are also there, and marketing organizations are there. So if you have any questions, best thing to do is talk to your lender or go to the SBA website, and you can get a complete list of all the types of nonprofits that are now open to the program. Next one, Bree. So, but it's important to think about the PPP funding process and how it works, right? The borrower applies for PPP2 at their lender or lenders. The lender reviews the application, you know, acts as the agent for the SBA and Treasury. They gather the documents. They'll tell you what you need and how you need it. They'll make sure you're eligible. They might ask you a couple of questions about your your quarterly revenues. It depends on who you are and what you're doing. And then they become the face of the program to the borrower. The lender approves the PPP2 application and sends it off to the Small Business Administration. The SBA does its review. They do an evaluation. They'll run it against various databases, trying to catch anything. And then if everything works, the SBA will assign a loan guarantee number, and send it back to the lender, or they'll inform the lender as to why the loan was denied, and the lender will then inform the borrower of the results. You know, if the loan has been denied, then the lender will tell the borrower why. They'll provide the codes from the SBA or information from the SBA about the reason for the denial. If the loan's approved, then the lender generates the legal forms. It's all e-signed. They'll send them to the borrower, you e-sign the documents, and then the loan gets funded. The process has been really working quite well. Most people who are in the system are getting funded within a few weeks. Next one, Bree. So the process can take 2 to 4 weeks. And it's really the front end of the process that takes the most time. For my clients, the SBA has been turning their documents around in 1 to 3 business days from when they get them. So the turnaround at the SBA has been excellent. Any delays are most likely at the lender and not at the SBA. So it's the front end of the process, getting all the documents together, the lender doing their due diligence, putting the package together to send to the SBA, and then sometimes at the back end where it may take a few days for the lender to to process the information they get back, a couple of days perhaps to prepare the documents and then fund. But it's actually going very well. So remember, your lender is your point of contact for the PPP2 process. We're here to help, obviously. You know, each lender is going to be somewhat different in how they deal with PPP2, but you know, make sure you provide the lender with all the documents they need, even if they ask for it twice. It's better just to get that done. Next one, Bree.
Steve, I think you might have to turn off your video because there's a lot of glitch in your voice, and I think it just might be your broadband right now.
Oh, sure. Well,
thank you very much.
There we go. So a couple of frequently asked questions. You know, should I apply for PPP1 forgiveness today? And the answer is yes. The PPP1 forgiveness process is now fixed. Forms are out, lenders are processing it. You know, you apply for PPP1 forgiveness through your lender. And so if for some reason your lender is slightly slower than someone else about opening the process, don't worry about it. You know, you have 10 months from your use of funds date. So the lenders will get up to speed and they'll take your PPP1 applications for forgiveness. And the process has actually been going very well. You know, should you apply for the second round with the same lender you used for the first round? And the answer is yes. All the lenders are open. It's a national program, so it's the same forms. And it would make sense to go with the people you used the first time because they already have your data on file. Do you have to do that? And the answer is no. You can go to a different lender for PPP2 than you used for the first round, but you'll wind up having to provide additional documents for the new lender that the first lender already has. Can you apply for a PPP2 loan with more than one lender? And the answer is yes, but obviously you can only get one PPP2 loan, but it can cause confusion in the system. Only one lender will get an SBA number and you may not know which one. And I've had clients who have applied to multiple ones, but you know, the one they applied to third actually worked faster than the one they applied to second. So they wind up getting a rejection from the second lender because the third lender's gotten the guarantee number. And you can only, and then people are sort of very concerned because they've been denied. So try and manage the process in a reasonable way. You know, it's one process, it's the same set of standards. You know, it's a national program. There's really no need to apply to multiple lenders unless for some reason your prior lender just doesn't seem to be doing what they're supposed to do. Can you get more than one PPP loan? The answer is no. One loan to an EIN number, one loan to a social security number. And do you need to get PPP1 forgiveness before you apply for PPP2? The answer is no. So given that the PPP2 window will close at the end of March and the forgiveness period could easily go beyond that, the important thing draw if you're eligible, and deal with your forgiveness for the first draw in sequence. Next one, Bree. So if you didn't get a PPP1 loan, can you get a PP2 loan? The answer is no, but that's only because if you didn't get the first round of PPP, then you just go for the first round of PPP, right? If you never got a PPP1 loan, then you are a PPP1 borrower by definition, which is better for you because there's no 25% revenue decline test for the first draw of PPP. And when you go to a lender's website, you'll see that they'll ask you if you're a second draw or a first draw, and the website will vector you to the right form to fill out. So the PPP1 program is available for people who did not have a PPP1 loan before. Is forgiveness different for 1 versus 2? And the answer is no. It'll be basically the same process, same set of rules, same set of guidelines. It's just that you'll do your second round of forgiveness after your use of funds period. How long does it take to get funded? You know, after you've applied, the bank's done its work, they send it to the SBA sends it back to the bank will generate loan documents, and then they'll fund. And that's been running 1 to 3 business days after you sign the documents. It's been very quick. People have been very pleased with how quickly the process has worked. Can you correct an application after it's submitted? The answer is yes, until it's funded. Once a PPP loan has been funded, it means the SBA has given that EIN or Social Security number, if you're self-employed, a loan guarantee number, and you can only have one such loan guarantee number. So just get it right the first time. 1 PPP loan per EIN if you're a corporation, or Social Security number if you're self-employed. Next one, Bree. So if you do have any problems or questions, get help, and get help before you file the application. The SBDC is here to help, both the Finance Center and your local SBDC. The lenders have people who are on board to help. It's the old adage, measure twice, cut once, that you don't want to apply using the wrong set of numbers, get funded, and then you can't change it, which has happened to a couple of people I've dealt with. Next one, Bree. So forgiveness terms, remember, PPP2 is spent on payroll costs and other eligible expenses, just like the first one. 60% of the proceeds are spent on payroll costs. Employee and compensation levels need to be maintained at about the same manner as required for the first draw. For loans of $1,000 or less, there's a simple forgiveness form called a 3508S, which is now available to all lenders. And the 60-40 split applies for both the first and second draw in terms of use of funds. So 60% goes for direct people costs. The other 40% are allowable overhead benefits, health, dental, medical benefits for clients as per the norm, rent, interest on a mortgage, interest on business debt incurred before a certain date, utilities, etc. And there's a lot of documentation about it with your lender as well as on the SBA's website. Next one. There you go. So, the payroll protection, the business must commit to maintaining an average monthly number of full-time equivalent employees, and a full-time employee for federal purposes is 40 hours per week, right? That's an FTE. And you want to try and manage the number of FTEs to the same as you had during the previous period. The amount that can be forgiven is going to be reduced, if you, in proportion to any reduction in the number of employees that you were able to retain, or if for whatever reason you had to reduce wages by more than 25%. However, everyone understands that this has been an unusually difficult time, and there are things called safe harbor rules. Safe harbor is an old nautical term, where even if you were at war with a country, a ship could seek safe harbor in a port to get out of the storm or to repair itself. They couldn't dock, but they could fix their problems and resupply and then take off again without any damage. So there are several safe harbor rules that were passed as part of the CARES Act, and they're there to really help companies that have been hardest hit through this process. Bree? So the main ones, remember, they're designed to help companies where the circumstances have been beyond reasonable control. And so if your FTEs were reduced because of a government order, in California, you couldn't keep your restaurant open, or you could only dine outside, or now that you've reopened, your capacity is limited to 25% of what it was originally allowed to do. Everyone understands that you can't have the same number of FTEs to serve a quarter of the number of tables. And so there's a way to deal with that. You were unable to bring employees back during the use of funds period, but you were able to bring them back by the end of calendar 2020. There's a workaround for that. You did have salary and hourly wage reductions that went into effect, but there were harbor. If you have an employee or employees who simply refuse to return to work and you followed the process as outlined, you sent them a letter asking them to return under the same salary and terms, then there's a safe harbor provision for that. So, and also there are some others, but these are the ones that are generally going to apply to most companies. So these 4 safe harbor protections can help you increase forgiveness for your PPP loan. We can help you at the SBDC, but so can your lender as you go through the forgiveness process. Forms and explanations are all available online. There's a lot of help out there for folks. So if you have run into a problem versus the original program, again, because you were forced to shut down, employees wouldn't return to work even though you tried to get them back. Something happened with salaries and wages. There are safe harbor provisions that are in effect to help you with this. Next one, Brianna. So how to calculate your loan if you're a corporation. Borrowers can calculate their aggregate payroll costs for the last 12 months or from calendar 19. So for Payroll Protection 2, given that your revenues need to have dropped by 25% in at least one calendar quarter in 2020 versus 2019, there is a high probability your costs would have had to go down as well if your revenues went down. So you can go back to using 2019 as the base, or if for some reason, it makes more sense for you, you can use the last 12 months. There's also a special provision now for seasonal businesses. So if you're only open in the summer, you're only open in the winter, and the old formula worked against you, now there are new formulas for seasonal businesses that will help. And if you weren't in business from February 15th, 2019 to June 30th, you can use the average payroll period for after that. So there's a link here. If you download the slides, there's a link to how to calculate this, and then also other stuff that will help. Next one. So one of the changes that have been made this week is how to make the program better for sole proprietors, contractors, self-employed people. Originally, the program worked off of line 31 on your Schedule C, which is your net profit from your self-employed business or activities. That's been changed to line 7 on your Schedule C. So line 7 is basically your gross profit rather than your net. The SBA, the government, is allowing you to move up the profit and loss statement to what should be a larger number. Your gross profit should be bigger than your net profit. So you divide line 7 by 12 and multiply by 2.5, and that's your PPP loan. Now, the maximum is still $20,833, right? Because the maximum allowable profit from your business is $100,000 a year. So 100,000 divided by 12 multiplied by 2.5 is what gives you the maximum self-employed loan amount of $20,833. And PPP eligibility is still a function of the same things. So you want to look at your 2019 Schedule C. Bree, next one, we'll go to the actual form. So this is what the form looks like. If you're a self-employed person, your 1099s go into your Schedule C as self-employed income. Line 7 is gross income, which is basically receipts minus certain direct costs, as opposed to all the way down at the bottom, which is line 31. So it should work out that this program will permit more companies to get larger Ppp2 loans than had been possible before, which is what everyone wants. Next one. So remember, it's 2.5 times the average monthly payroll cost plus healthcare if you're a corporation. However, if you are in Code 72, which is the broadly defined hotels, casinos, food service, restaurants, motels, bed and breakfasts, one of the groups that have been hardest hit by COVID, you can do 3.5 times the average monthly payroll cost. So if you're in the hospitality industry broadly defined, you can get 3.5 times. If you're ever, for all other SIC codes, it's 2.5 times. The maximum loan amount is $2 million. Next one. So allowable use of proceeds, right? Remember, 60% goes for payroll. Payment of interest on mortgage obligations if you own your space. If you rent your space, then you can deduct your rent. Utilities and any additional uses, which we'll cover on the next page. And the eligible costs for payroll are salaries, wages, commissions, similar compensation, tip equivalents if you're in a business that has tips, vacation time, family leave time. If somebody was dismissed or separated and they were given a payment for that. Group health benefits, including employer health insurance premiums, retirement for payroll. So pretty much most of the costs that you'd incur if you're running a company and you have a payroll. Remember, if you're a corporation, you'll have a payroll. If you're a self-employed person, a contractor, a sole proprietor, you'll have a Schedule C because you're as opposed to a payroll. So it includes, and these are the same basically for the first draw. Next one, Bree. Good. So additional expenses, right? If you needed software to keep the company running, you have a cloud computing system that does reservations or manages a part of your business, other human resources and accounting needs, property costs that can be insurance covered, property damage costs if you incurred them, supplier costs. But for most of these other costs, talk to someone, talk to your accountant, talk to your lender, talk to someone at the SBDC. Most of your funds will go to payroll costs. And you do have the ability to use a 24-week use of funds as part of PPP2. So the Ppp2 loan at 2.5 or 3.5 times your average monthly payroll, you have basically almost 6 months, 24 weeks to use the funds, which works to your advantage, allowing you to use more of the funds for payroll than would otherwise be possible. Next one. So the other part about PPP is that your idle advance, right? The idle program still exists, but during 2020, if you got an idle loan, you could include the number of employees in your company and check a box that said you wanted the emergency assistance, and you got $1,000 per employee up to 10 employees or $10,000. And the new federal law has cleared up whether or not that was an advance or an offset, and it's basically a grant. So you're not going to deduct your idle advance from your PPP one forgiveness amount. The covered period is between 8 and 24 weeks. Most folks will opt for the 24-week period, but you don't have to. Group insurance, vision, and dental are eligible expenses. And so you want to basically be able to focus on the fact that if you did file for PPP1 forgiveness early and you had your idle advance deducted from your PPP forgiveness amount, the SBA is working in the background to go through all of those forgiveness forms and correct them to credit you back the monies that you should have received. So you don't have to refile your forgiveness form if you filed early. The SBA is going to work to do that for you. Next one. Thanks. So remember, expenses made with forgiven PPP loan proceeds can be deducted from both federal and state income taxes for your 2020 federal and state of California tax returns. The gross income, you don't have to report your PPP loan as part of any income or any income forgiveness. And gross business income is not going to include the forgiveness of the loan, the idle grants, those basically almost like they don't exist, but they don't have an impact for taxes, which is great. Next one. Right, so keep any and all documents related to your payroll costs, your benefits, your utilities, your rent, your mortgage interest. Right, applications can be found at the SBA.gov site. Most everybody on this call will probably fill out the 3508S. If you Google 3508S, you can download a copy and look at the form. It's really a very straightforward, simple form. It's less than 2 pages. Just keep your documents for at least 4 years, which is a smart thing to do. Next one. Here we go. And so PPP versus idle. Remember, the PPP process is forgivable with all the things we just talked about. If it's not forgiven, there's a 1% interest rate that applies. It's a 2 to 5 year term loan. Use of funds, we talked about. You apply through approved SBA lenders, which is pretty much every lender one can think of in the broader Bay Area and California. And it's not a collateral-based system. Idle is not forgivable. Idle is the economic injury disaster loan program. It's a 3.5% interest rate fixed for 30 years if you're a for-profit. It's 2.5% interest rate fixed for 30 years if you're a nonprofit. Idle can be used for working capital, inventory, and a variety of other normal business expenses. If you got an idle loan of more than $25,000, it will be secured by a simple UCC filing. If you get the maximum amount of $150,000, then they deduct $100 from the loan proceeds as a processing fee. But great programs, especially for companies that have been impacted with revenue declines, et cetera. Next one. So things to remember, and this is what I tell everyone I work with, don't get too lost in or about the Ppp program. It stands for payroll protection. And the whole idea is to help thousands of companies, sole proprietors, contractors across the United States maintain employment, right? If you think about it in the broader terms, you'll be less, right? The goal of this program is to help you keep people on staff who you would not have been able to keep on staff. And if you're a sole proprietor, allow you to maintain your own spending levels, your own compensation up to a point, through what would be a very difficult time for a lot of companies. So it makes the most sense when you think of it broadly as opposed to too narrow a detail. Keep your documents for 4 years. The PPP1 process, the forgiveness process, is open and working well. I'm sure Carrie will chime in later and give some statistics on it, but I have a lot of clients who've gone through it now and quite successfully. And remember that your lender is really there to be your point of contact for both the PPP1 process, the Ppp2 process, as well as forgiveness for one. So work with them, go through them, they're going to help you. Next one. Thanks. So And most PPP borrowers, given that most of the borrowers are really small, are going to receive significant forgiveness. Sole proprietors, contractors, self-employed people, in reality, should be able to get 100% forgiveness without any difficulty, given a 24-week use of funds period. The idle advance is a grant and it's not deducted from your forgiveness. The unforgiven portion of the PPP loan becomes a 2 to 5 year term loan at 1%. 1% is a pretty good interest rate in any environment. And the PPP loans are not personally guaranteed so long as they're used for the intended purposes, which is very unique. Next one. And with that, I will turn it back over to Sunita. My email address is in the presentation. If you do have questions about this later, please feel free to email me. We'll try and answer a bunch of questions as we go now. Thank you, Sunita.
Thank you so much, Steve. Great presentation. I want to go over some frequently asked questions throughout this webinar. People are asking if they've already been funded for their PPP2, if they can ask for more since things have changed. And at this point in time, you cannot. Your funding is, that money is what you've gotten so far. If you are in the process, you can ask the bank to hold your application, and then we can see what's going to happen next week. There might be some more information in the next coming weeks about reapplying, but as of today, you cannot reapply for a PPP to get more money. So a lot of questions in regards to that today. Also, I got my round 1 PPP just a couple of weeks ago, but that was based on 31. Yes, and unfortunately, we can't go backwards as of yet unless there's some new information that SBA has that just came out. As of right now, we're unable to go back and request more money. But if you have not been funded yet, you can place a hold on it, call your bank, ask them to hold it until we get further information next week on how to go about that.
That is correct, Sunita. Your statement was correct.
Thank you so much. I appreciate that.
You're welcome.
And somebody's asking, Darlene's asking, will PPP1 automatically roll over to be reapplied? I believe you're asking in regards to the increase for the Schedule C, and no, it will not. Some people also asked if they had to apply for a PPP2. Yes, you do. There are 2 different loans, so you do have to apply for both of them.
And one other point of clarification, if you have applied for a PP1 previously and you have not yet applied for a PPP2, you would not be able to do that at this point because you don't have the time to use that up, the PPP1, before you would have to apply for the PPP2. So you need at least 8 weeks to use the PPP1. And if you applied now for a PPP1, you wouldn't have that completed before the deadline to apply for the PPP2 as of today is March 31st. So just want to clarify that for some of you that are asking about if you don't have a 1, can you still get both?
Thank you, Carrie. That's great information. Yes, I mean, it gets a little confusing out there. We get confused here with so many changes, and great questions from everybody. Next slide, please, Bree. So we're going to go over the idle appeal process, targeted idle advance, SBA debt relief. There has been some changes to that as well as of last week, and the SVO, going over that briefly, and also Joan will pick it up and she will go over the employee retention credit because she is the specialist in that. Next, please. Idle program reopened in January. So that means that if you have not applied yet, please go and apply. It's located at sba.gov. Here's also a link to that, but sba.gov, you can go there, fill out the application. It's fairly easy. The turnaround time is excellent on the new applications, and the application has been extended to 12/31. I did hear there's been talks about additional funds going into the PPP and to the idle, but that has not been written into law yet. So there's lots going on constantly, and it's going to keep going this way, I think, for the next several months. Next, please. So you have up to 6 months to get reconsidered on a declined loan or a loan increase. So if it's been 6 months, if it's even been a little bit longer, I have seen some get through. And the reason you would, it might get through is you would have to write a letter. Why did you wait more than 6 months? Were you not sure you were going to be able to open? There was some circumstances. You thought you were going to be able to use the money up within a certain amount of time, but then now you realize that you need additional funds. These are some of the reasons that you will be able to use, and there's others, whatever your situation is, just put it in writing when you're going through the reconsideration process if it's more than 6 months. So if you applied for an EIDL and were denied, do not reapply, please. Go through this process, go through the separate and dedicated appeal process with the PDC REONS SBA.gov. This presentation is also given to you within the chat. You can also watch it again. I know a lot of people were saying that there's some glitching with the audio, so we do apologize for that. You know, with everyone working from home and kids working from, kids also going to school, our broadband gets a little glitchy here. So a second application will be flagged as a duplicate and slows down the process. So please only apply once. Appeal process is working. There are appeals getting through. I know some of them are taking a little bit longer than others, but you know, definitely keep at it and keep in contact with that group. SBA's team will let you know what documents are needed. Also, we can give you that information. For sure, you're going to need the 4506T document from June 2019. Please fill that out. And also there's another document and we can share that information with you. Somebody was asking what documents do they specifically need, but SBA will tell you that. But this is how you're going to go through reconsideration. And in your subject line, please put your application number and then why you are contacting them. Decline loan, reconsideration, need more funds, exactly what it is that you're looking for. Next, please. The SBA for the targeted advance will reach out to those that qualify, that can qualify via email. People have already been contacted. So they're going to reach out to you via email. Hopefully you're looking in your spam and other areas. Sometimes your emails do go to the junk or spam box. So please look there. So what you need to be able to qualify for this is you'll have to be in a low income community, suffered greater than 30% economic loss, and have less than 300 or fewer employees. If you've already received part of your EIDL advance, they will make you whole up to $10,000. If you've already received the $10,000, then you would not be able to get more than that. It's up to $10,000. There was a lot of people that only received $1,000 or less than 10. They will make you whole up to 10 if you can qualify. Those who applied for an EIDL advance but didn't receive funds due to the lack of funding will receive a full $10,000 if they meet the requirements above. Next, please. Items needed to verify this information. So you'll have to have this information ready for them. 2019 federal tax return recommended to have on hand when applying. So you do have to, they will send you an email, and within that email, there's another application that you will complete and provide all of these documents and information. You'll need your EIN or social security number as specified on the original EIDL application, monthly gross receipts from 2020 and 2019, and completed months in 2021. Confirm information on original EIDL application is still accurate. So changes may require a manual review and documentation. So hopefully there aren't any changes. It'll just make the process much easier, but if there are, it's okay. You can make certain changes. Applicants that pass the initial eligibility will be required to complete a 4506T form. And that is just a form that allows SBA to gather information from the IRS, a copy of your tax return.
Sunita, could I interject? I'm sorry.
That's okay.
I just wanted, thank you. I just wanted to interject that it's very important if you receive that email, go to the SBDC Finance Center and make sure you submit everything accurately and correctly the first time, because there's no reconsideration on this application for the rest of your advance EIDL loans. So be very careful that everything is correct. You don't misstate an address. And that has been a challenge for some individuals. So please carefully work through that with the SBDC finance folks, because there's no reconsideration on this particular process. Thank you, Sunita. Sorry for interrupting.
No, great information. Thank you very much. Well, we should include that in the slides, that you have one chance to apply for this. And if it doesn't match, so just, you know, as Steve said before, measure twice, cut once type of thing. So SBA debt relief. This did change last week as of the 16th, and the information that we had on that deck was not correct. I did not catch it until a little bit later. There's so many things going on, but this is the most correct information that I have as of right now. For the debt relief, all borrowers with qualifying loans approved by the SBA prior to March 27th, 2020 will receive an additional 2 months of payments on principal and interest starting in February, starting this month. So that did change. I believe it was 3, but it's actually 2. There's not enough funds in that particular debt relief for this to continue at the rate that they had stated previously. Underserved borrowers, namely the smallest and hardest hit, will receive 3 additional, so a total of 5 months. And community advantage loans and microloans approved by SBA prior to the March 27th, 2020 will receive 5 months of P&I payments. SBA payments of principal and interest on the first 3 months of a newly approved loans. Previously it was 6, but now it was 3. So as of this month, it's going to be 3. Will resume for all loans approved between February 1st and September 30th, 2021. All of these are capped at $9,000 a month. So if you owe more than $9,000 a month, you would still need to pay the remainder to the lender. All of this is subject to the availability of funds. So if the funds do get used up in this particular program, then it will stop. But your lender should be notifying you of this. You should be in contact with your lender as well. Next, please. So here is some more enhancements for the debt relief by SBA. It waives borrower and lender SBA fees for 7A and 504 programs. Some bank fees may still apply. There will be bank fees that still apply for your loan. Please talk to your lender and ask them exactly what those are so that you're aware at the beginning of the stages. And they will be able to give you a good estimate of what your fees are going to be from the bank. Loan guarantee increases to 90% from 75% to the bank. SBA Express loans increase from $350,000 to $1 million, and 504 Express loan program for real estate loans of under $500,000. Microloan program expanded to provide financial and technical assistance to businesses impacted by COVID-19. Why they've done this is because they're trying to entice the lenders to continue lending to small businesses. So they have increased the guarantee to the lender to 90% of an SBA guarantee. So this is what this means for you as a business owner. Next, please. So the SVO, Shuttered Venue Operators grant, it is not live yet. Information is located though on the SBA website. So grants will be available to eligible live venue operators or promoters, theatrical producers, live performing arts operators, museum operators, motion picture operators, and talent reps who demonstrate a revenue reduction. I know there was a question in regards to somebody that was assisting with this. I don't know if they were a promoter. If they are a promoter, then yes, they are one of the people. But if they're just selling tickets on the side and it's not really, you know, that may be more difficult for them to be able to document, to be able to get this grant. So of course you cannot get the PPP2 and this grant. So it's either or, and you cannot apply for PPP2 and then apply for the SVO. So this is really a big sticking point here on this SVO. So the first 14 days of the program, grants will be awarded to venues with a minimum of 90% venue loss. And it just goes for, then the second is 70%, and then the next 28 days is 70%, and then 50%. So it just goes in increments. Next, please. The SVO, the grant is going to be administered by the SBA Office of Disaster Assistance. So it's not going to be the SBA office, but it's going to be the same SBA Disaster Assistance office that is handling the idle loans. So the grant amount in general will be about 45% of gross earned revenue if in operation on January of 2019. If the venue is in operation after 2019, you calculate the average monthly gross revenue for each full month in operation during 2019 and multiply that by 6. So applicants must have been in operation on February 29th, 2020, and must not have received PPP loan on or after December 27th, 2020. If you can apply, you can apply if you received an idle loan or a PPP first draw loan in 2020. The SVOG can be used for specific expenses such as payroll, rent, utilities, and some other costs, which will still be left to be determined. The SBA will publicize the opening of the portal for applications in advance. We will also provide that. We'll give it to you in a newsletter. If you are not already signed up with our newsletters, please do so. NorCalSBDC.org for that information. Please sign up. We provide you the most updated information via newsletter once we get it in, if the webinars are not for a few more days. Next, please. These are some of the entities that are included: live venue operators or promoters, theatrical producers, live performing arts, relevant museum operators, zoos, aquariums, motion picture theater operators, talent representatives, and each business entity owned by an eligible entity that also meets the eligible requirements. You can get more information from SVO grant at sba.gov, but what is on the website is the most current information. Next, please. Employee retention credit. I am going to hand this over to Joan Yamauchi. Thank you so much, Joan, for joining us today, and thank you for presenting this for us.
Hi, everyone. Next slide, please. So there was a program that the IRS launched last year. Well, actually, it was probably SBA IRS, and it was part of the CARES Act. It's the Employee Retention Credit. Last year in 2020, if you received a PPP loan, you were not eligible for this Employee Retention Credit. That was changed in the December stimulus package. They changed several of the rules. They made it a little more generous. And they also let us know that anyone who had a PPP loan in 2020 is now eligible for this tax credit. And they may, if they qualify. So the employee retention credit, it's a refundable payroll tax credit, and it's offset against certain payroll taxes. And mainly you would apply for this on your quarterly payroll tax return, your 941. It's a bit complicated. I think this was the first time that I took a deep dive into the IRS website and tried to crunch as much information as I could and simplify it if that's possible. But I think anyone who has an active payroll, you should really take a look at this. And I wanted to kind of, before I got going, I wanted to let you know I did a bit of analysis last night, and if you had an employee for second, third, and fourth quarter of 2020, and that employee was paid minimum wage and they received, or they worked 25 hours a week. In that regard, that employee, even if you paid that employee 2.5 months of PPP, that employee would qualify for the full amount of this employee retention credit. And in 2020, that will work out to $5,000. And you receive that money whether you offset against payroll taxes or whether you apply retroactively and you'll get a refund check for that. So it is really valuable, I think, for a lot of people to take a look at it. I was kind of excited about it. So here, I'll let you get going. I just wanted to get your attention and say you should look at this. It's going to take a little work. If you are familiar with payroll operations, you should not have a lot of difficulty in working through this. If you have ADP, if you're using QuickBooks, there should be tools that you can use to get through this. So I'll go from there. So who qualifies? So if you were fully or partially suspended during Q2, 3, and 4 in 2020, and or Q1 and 2 of 2021. So we are moving forward into Q1 and Q2. You can qualify for this. A lot of businesses in California are going to qualify this basically due to this suspension. Restaurants qualify. Non-essential businesses that were closed in second quarter of 2020 qualify. You know, there's probably hotels, boutique hotels that qualify. There's a lot of businesses that can qualify for this. There is some wording on the IRS website that talks about government orders limiting commerce, travel, or group meetings. I don't have the guidance on that yet, but you know, you probably need to think about how these COVID closures affected your business and do you qualify? If you were not closed or suspended, you can also qualify if your quarterly gross receipts in 2020 are 50% or less of the same calendar quarter in 2019. So this is similar to that Ppp2 qualification. Now that's for 2020. 2021, they've made it more generous. So in 2021, if your quarterly gross receipt is less than 80% of the gross receipts in the same calendar quarter in 2019, you will also qualify for 2021. So there are a lot of ways to qualify. Most people, most businesses that have qualified for the PPP, it's possible that they are able to qualify for this 2021 gross receipt situation. So if you were not operating in 2019, but yet you went into operation, say late 2019, beginning of 2020, and you were in operation by February 15th of 2020, you can use either the same calendar quarter in 2020. So if you're looking at this quarter, first quarter 2021, you can apply it to first quarter 2020 to determine the revenue calculation. Or if you're looking at first quarter 2021, you can look at fourth quarter 2020 to determine if you are eligible based on this gross receipt decline test. So if you got the PPP loan, if you got the first one, if you got the second one, you still qualify for this employee retention credit. And the downfall here is self-employment income does not qualify for this ERC. So if you are a sole proprietor with employees, you can apply based on the wages reported by the employees. If you are a sole proprietor and it is just you, unfortunately, you won't qualify for this ERC. So next, please. So how do we calculate this? Oh boy. Okay. So any qualified wages are limited to a maximum of $10,000 per employee. And in 2020, it's per year. They've made it more generous in 2021. It's $10,000 per quarter. So for example, if I'm an employee and the 3 quarters of 2020, I made minimum wage. I might have made $20,000 in those 3 quarters. I worked full time. I was paid $5,000 from PPP. So the qualified wages are now 15,000, or my wages are now 15,000. And it's going to be a maximum of $10,000 that will qualify for this credit. So you can't use that $15,000. It's got to be, you're going to be limited to the $10,000 per employee. And in 2020, it's over a year. In 2021, it's per quarter. So gross wages are going to include the employee gross wages and any employer paid healthcare premiums. That is what constitutes gross wages. And as I mentioned, any wages that you paid using PPP funds, you have to deduct those from the employee's gross wages. And then at that point, you determine if they are above 10,000. You know, you have a cap of 10,000 for that quarter or that year. And then if they are below the 10,000, you use the wages that you reported. So for 2020, the way to calculate this ERC, it's equal to 50% of the qualified wages paid to the employees during March 12th through 12/31. I know it's a little bit more than 3 quarters. The maximum credit is going to be $5,000 per employee for the year 2020. And anyway, it's no longer available. So you're going to have to look at each quarter. So let's say you start in quarter 2. You qualify, you were closed. You get to quarter 3 in 2020. You're opening up, you're still suspended. In quarter 4, you're fully open. And I know probably a lot of people that qualify this were not open in quarter 4. They did have to shut down. But just for example here, if you had to shut down, if you did not have to shut down in 4th quarter, you still qualify for this ERC as long as your wages did not, or your gross receipts did not exceed 80% of the 2019 quarter that you're in. So 4th quarter 2019 did not exceed, 4th quarter 2020 did not exceed 80% of 4th quarter 2019. So it's a little cumbersome to kind of work through these. It would be good, I think, if you got a spreadsheet. I'm guessing ADP is, I'm hoping they're on top of it. I was going to try to check to see what kind of program they have now. I've seen things for the PPP loans and they've been pretty on top of things. I think any payroll service will be offering, you know, some tools for you to get through this. The last comment, if 2019 FTE exceeds 100 employees, your qualified wages are those paid to employees that are not providing services to the employer. Basically meaning your employee is not coming to work, but you paid wages to them. I don't know if a lot of people on this call have more than 100 employees. I'm going to assume if you do have more than 100 employees, this should be fairly simple. I don't want to say fairly simple, but you should have, I'm guessing that you have staff that works on your accounting, you have bookkeepers, you have access to skills that will help you get through this a lot quicker. So 2021 was changed a little bit. So the employee retention credit is equal to 70% of the qualified wages paid to the employees beginning January 1st. And this will go through June 30th of this year. They extended it for 2 more quarters. So the maximum credit amount is $7,000 per employee per quarter. They changed this. This is a lot more generous. The total that you can get per employee is going to be 14,000 if you qualify for first quarter and second quarter of 2021. They made it a lot more generous. You do have to requalify each quarter here. It's a little different than 2020. So you get to the end of first quarter, you say, okay, I did qualify in first quarter. That doesn't mean that you're going to qualify in the second quarter. You'll have to, take another look and make sure that you meet any retention qualifications for second quarter. So as we spoke about above, if a 2019 FTE exceed 500 employees, I don't know if we have a lot of people on this call with, exceeding 500 employees, but if your wages were, qualified wages are those that are paid to employees that are not provided services to the employer. So your employee didn't show up, you paid them anyway. Those are the only wages that you can that you can report for the ERC if you're if you have more than 500 employees. I hope you have staff and your staff are looking at this if you have over 500 employees. Okay, next please. So how is this refund claimed? There's a few ways. So if you go back and you decide, okay, we're in 2021 now, did I qualify for 2020? And you go back through some of the criteria, or you talk to your accountant, they go back through it, or you contact ADP, your QuickBooks person goes back through, and you decide, yes, I was shut down, I was a restaurant, I think all of them qualify. Yes, I was shut down. I was a retail business. I was non-essential. The way that you get this refund is you're going to have to amend your quarterly payroll tax returns for the 3 quarters, second, third, and fourth for 2020. So that form is 941-X. Your accountants can do this. If you have enough skills, if you do your own payroll, you should be able to do this. If you have QuickBooks, you should be able to do this. So you file an amended quarterly payroll tax return for each quarter. You report the qualified wages in there. I did take a look at the 941 documents from 2020, and there's a worksheet, there's also some line items for you to report your qualified wages. What the IRS will do is they will send you a check, an automated deposit. They will issue the entire refund to you once this is processed. I don't have the timeline on that. 6 to 8 weeks is probably very similar to getting your tax return. But this could be worth a significant amount of money if you were able to retain employees and if you had, enough business to keep them on the payroll. So now we're going to sort of talk about 2021 because we are moving forward and the first quarter hasn't happened yet. The IRS is going to give you the option to estimate your employee retention credit. And you can go ahead and reduce your federal employment tax deposit. So anyone that has a payroll, unless it's fairly small, like under $2,500, your employment taxes are under $2,500, everyone is going to make some sort of tax deposits throughout the quarter for their employment taxes. And what they're allowing you to do is to withhold these taxes up to the amount of the anticipated ERC in the current quarter. So if you think you're interested in this, this is where I would start. You can go back to 2020, it's always going to be there, but you can go today, you can start taking a look at wages you've paid. If you don't have your Ppp2 yet, you can use wages from the 1st to the 24th, which is today, and you can start reducing your tax deposit. You don't have to make a tax deposit. You probably need to file the paperwork, but you need to let them know that you are not making a deposit because you are claiming an employee retention credit. So chances are it's possible the deposit that, let's say, you're going to make today or tomorrow, it's probably not going to happen that quick, but any deposit that you're going to make soon, it's possible that your ERC that you've calculated to date is not going to cover the tax deposit that you're going to make tomorrow. So what you are able to do is you're able to roll that forward for the next deposit, and then the deposit after that. Let's say you're a weekly depositor, you can roll it forward to the following weeks. And then you can continue to update your quarterly wages as well for first quarter 2021. If you get to the end of the quarter, this is all going to be reconciled when you file your quarterly payroll tax return, which is Form 941. If you still have not used all of your employee retention credit that you've calculated, you can carry any unused amount to subsequent quarters. So you will be able to use all of these funds. Whatever you are able to calculate, any credit, you will be able to use it in the future. You can also get a refund at the end of the quarter. So there's several ways to get this money, but if you haven't used the entire amount against your employment taxes, you can get a refund. You can also, as of, let's say today, you can go through and you can request an advance payment from the IRS. This one's a little complicated, but it's there, it's possible. If you believe that your tax deposits for the next 5 weeks for quarter one are not going to be enough to cover your anticipated quarterly ERC, you can file Form 7200 with the IRS and ask them for an advance payment for the amount that you don't believe for the tax deposits that for the amount that is not going to be covered by the tax deposits. So you're doing some estimating. It can be a little complicated, but if you are looking for cash flow, this might be something that's valuable to you. I don't have the timing on how quickly they process this Form 7200. It's probably something that I will pay attention to. I'll ask clients if they've filed this, how quickly did they get their funding. It's something that maybe we can report on in a few weeks. If you decide not to reduce your tax deposits, if you continue to make your tax deposits every week from here to the end of the quarter, when you get to the end of first quarter and you file your quarterly payroll tax return, you can ask for and receive a credit for the ERC. So you can ask for a check, you can ask for an auto deposit for the full amount of the ERC. And or you can roll it forward. You've got a few options. You can let the IRS hold on to your money and you can use it for future quarterly payroll taxes and apply it to future taxes, or you can ask for the funding at that time. The one thing I wanted to point out was be careful, don't overestimate your ERC, because if you get to the end of the quarter and you have not deposited enough funds to cover your taxes and your ERC isn't enough, and you owe taxes at the end of the quarter, you could be penalized for failure to deposit federal taxes. So be very careful, be a little conservative. You may think, okay, I have a $15,000 ERC, let me go down to 13,000. And at the end of the quarter, I'll get the other 2,000 or 1,000, whatever it is. You do not want to be, under withheld, so to speak. So The one thing here, I have not worked through all these forms. I may have a client that I may use as my test case to go back through 2020. I know she qualifies. And so I thought, well, maybe what I can do is help her work through this whole process. And that should give us a lot more information for, in 2 weeks to have a better understanding of how this whole retention credit works. I would definitely suggest you talk to your accountant, your bookkeeper, your payroll service, your CPA, because there are a lot of moving pieces to this, but I think if you can get through it, it's well worth it. And especially it can help your cash flow going forward for the next, month and 3.5 months, 4 months. So I think that is all I have for now. So thank you, everyone.
Thank you so much, Joan. I appreciate that very much. Carrie, so sorry, I know it's later in the day. If you would like to provide any updates, that would be wonderful.
Thank you, Sunita. Absolutely. I have some good information and I'm going to share this with you so you can share it with the group in some links that are on our website. I'll email that to you. First of all, thank you everyone for allowing me a few minutes here. I'm happy to let you know that we have a comprehensive COVID relief program report posted on our website, and that data is accurate and valid as of February 18th. So what I'm going to share with you are the highlights. It's over 30 slides, but they go into detail on some of the reporting information that you might be interested in. As of the 18th, more than 1.9 million Paycheck Protection Program loans totaling more than $133 billion have been approved by SBA. Our lending partners have worked very hard to get this program out, and I'm very pleased with the rest of the information here, and that is our average loan size is just over $73,000. So we are reaching our smaller business community, and 83% of our paycheck protection loans that the lenders have provided are less than $100,000. The largest segment of the business population that has received these are the accommodations and food services accounts. They've received 18% of all of this lending, and it was primarily driven by restaurants. So I'm happy to hear that we're able to keep them rolling. And also in the low-income neighborhoods, there were 418,700 loans made across the country, with an average loan size of $79,398. This is representative of 24.9% of all the approved Paycheck Protection Program dollars. In our rural neighborhoods, there have been 481,627 loans approved, and that average loan size is $48,107. And this represents 17.36% of the approved dollars. So as you can see, we are getting into those smaller, more challenged communities. And as Steve mentioned earlier, there is a period of time where in the next couple of weeks through March 10th, we'll have set aside for those areas to receive the Paycheck Protection Program lending. One thing I do want to note is we are working very hard to be transparent and share this information with the country and our congressionals who have worked hard to put the legislation together. An area of our application that has now been updated and moved to the front of the application is the data on race and ethnicity, gender, and veterans. Of the race and ethnicity, 78% of those questions remained unanswered on these applications. In the gender category, 54.7% were marked unknown or not stated. And in the veteran category, 64.6% were marked unknown or not stated. This is very important information for our Congress. If you are applying for these loans, please do take a minute to check those boxes so that we can continue to report on the work that is being done with this program. So far with the Paycheck Protection Forgiveness, 5.3 million loans have been made, 1.7 million loans have been forgiven, and 3.3 million applications have not yet been received by SBA. So approximately 32% of all the loans have completed the forgiveness process. And again, that process can take a little longer. There are certain sizes of loans. The larger loans may take longer. So please be patient with your lender. They have 60 days to process your request and then submit it to SBA, who then has 90 days to process that. So most of the loans are going through for forgiveness fairly quickly, but do be patient with your lenders as they are working diligently now on Paycheck Protection 2 loan applications. The COVID-19 Economic Injury Disaster Loan Program has reached $200 billion in loans made to small businesses for over 3.7 million loans, with an average loan size of $54,000. So although some of the economic injury disaster loan reconsideration process has been slowed down by some front end activities to help make sure that we're giving those funds to the correct people, you will get a reconsideration. You can apply for that within 6 months after your first decline. You may want to look into the reason why you were declined and worked with the finance center to see if you can correct those, and then send your application in. And again, there are quite a few people doing that, so it may take some time for you to get your reconsideration information back. Please, again, be patient with us. We are working as diligently as we can to complete those. And as mentioned earlier, there will be the special initiative that the president announced to reach businesses with fewer than 20 employees and sole proprietors. That period's from February 24th through Wednesday, March 10th. There are also additional program changes there regarding sole proprietors and independent contractors. If you go to our website, you can get an outline of those additional changes. And the last thing I want to share with you today is that it's still Black History Month, and we're happy to let you know that we have a webinar tonight at 5 o'clock Pacific Standard Time. They're going to speaking with businesses about sustainability, small business loan options for you, and you're going to actually hear from industry leaders about the future of business. Everyone is welcome and encouraged to join this webinar tonight. I will be sharing that link as well with Sunita and Brenna for that information. Thank you all and have a great rest of your day.
Thank you so much, Carrie. Really appreciate your time. This is the information for SBA support right here, disaster, if you need to contact them. Next page, please. I'm going to go over really quickly what we have coming up. Our next update won't be until March 10th. So we will be back on March 10th, Wednesday. Now, if something drastic happens in between then we will put another webinar together. But as of right now, our next Wednesday webinar won't be until the 10th. Tuesday, March 9th, Steve Roth will be putting on owning and investing in real estate for small business. And Tuesday on the 23rd, expansion capital for profitable businesses. And you can get the links there within the chat or go to NorCalSBDC.org and look on the 9th and the 23rd for those dates. Next, please. These are some additional webinars that are coming up as well, and it is all here in the chat. If you go next, please. If you need to reach us, this is information here. So thank you everyone for sticking with us. We really appreciate it. We're trying to answer as many questions as possible. There are some really great questions in here, very detailed. Some of them are so detailed that we need to speak to you one-on-one, and we have indicated so in the chat, or sorry, in the Q&A, because we need more information from you to be able to give you a well thought out answer. It's difficult to not see the documents you're talking about or how your business is related to be able to complete that. So we are trying our best here to answer as many questions. We will stay on for just a couple of minutes more to answer some of the questions within the queue. Edith is asking, can we please share the link of the report? Yes, we can, Edith, as soon as we get it. If I don't get it before the end of this, I will send it to you via email, Edith. Let's see here, Lori, there's some ERC questions and Joan is answering them feverishly. Let's see here. Somebody's asking, they changed their address, and I believe Alex, you were on the call maybe last week or the week before. I'm not sure if that is going to take into effect, and the reason is because they're going to go off of the information that you had previously, and they're using that information for the targeted idle advance. If your address has changed and now you're able to be go into the bucket for the idle advance, I'm not sure if that's going to be if they're going to be able to do that or not. And so sorry, but it looks like we have lost our SBA people, so I apologize for that, but I'm not sure if that's going to be something that you're going to be able to do. This may go out longer. There's new monies coming in, there's different changes going on. Like I said, if things drastically change, we will have a Wednesday webinar next week, but if not, we will have it on the 10th. We appreciate you all being here today. Thank you so much to our special guest, Joan, for hanging in there with us, Joan. Thank you for a great presentation, and to Steve Roth, Brianna also, and to SBA Carrie, who was here with us today. We appreciate everybody being here, and we will see you the next time. Goodbye and have a great day.
Bye.